We've had a look at what an income statement is, and we saw that what an income statement is. So now we'll be focusing on the different divisions of the income statement, and the first one we'll be focusing on is your revenues. Now let's have a look at what a revenue is. A revenue is the income that the business or a business has in a form of cash or cash equivalents, usually from the sale of goods and services to the customers. Revenue is also known as sales or turnover. Now, most companies or chartered accountants or auditors or business people like using the word turnover. So don't be surprised when you find them speaking about turnover. Just know that it is revenues that they're speaking about. Now, because we have different types of businesses that one can generate money from, or money can be brought in different ways. So we'll be looking at how different companies bring in money. So we'll have such an example as your manufacturing company. Most of its revenue is from selling of goods. Because of a manufacturing company manufactures the goods, then when the goods is finally done, they have to sell it in order to gain their income. Then we have your sales, your service businesses, such as your law firms and your hair salons. They receive their revenue from rendering services. Now, if we were to look at the difference between manufacturing companies and your law firms or hair salons, the difference would be that the manufacturing company, their products are tangible, or their goods, they are tangible. But when it comes to your law firms and your hair salons, their goods are not tangible because of most of the time they first have to do the service, then you pay. As for when it is in a manufacturing company, the manufacturing company produces the product, then you buy the product on the spot when it's done. That's why it is called rendering services. So they render the service to you first, then you pay after. Then we have your lending businesses, such as your car rentals and the banks, which they receive most of their revenue from fees and interests generated by lending assets or money to other organizations or individuals. I think that one we all to understand. Then we have your other revenue, which is also known as your non-operating revenue. So your other revenue or non-operating revenue, it's revenue that is not tied directly to a company's regular operations. A company that sells cars would record the revenue from the selling of cars as normal revenue, because of that's what the company does. It sells cars. So that would be their normal revenue. But now if the same company also rented a portion of its building to another company, so now it is rental, they would record that revenue under other revenue, because it shows that the money is from something other than their core operation. So their core operation is selling cars, and because of now they are renting out property, that will fall under other revenue, because of it is not the core operation that they are doing. Let's move on to the next section, which is your expenses. I just hope that everybody understood what revenues are and how revenues operate.